Hi there, David Pereira here from Rent to Grow Homes. Excited to bring you another rent to own deal that we have available in Cornwall, Ontario. Rent to own is a company with a mission of helping deserving families earn home ownership while giving passive investors a great return on their money. So on the right here, you can see the investor summary. So I'm going to go through this quickly. This is a house that we're targeting. We think the purchase price is going to be about 455,000. This is a 2-year deal, so the future buyback price, if we just assume 5% annual appreciation, is 501,000. The total all in from the investor to close this is 72,475. There is monthly cash flow, although it's lower than most of our deals. Typically, we are able to get 400 to 500, but I'll explain why later. Why this is a bit lower. Monthly cash flow is 150. Cash on cash return is 2.5%. But here's the big number: is the annual targeted ROI, which is 21% per year on this deal. So for 2 years, that's 42%. If we multiply 42% by the 72,000 investment, that comes out to 30,440, and that's approximately 70% of the profit pie, meaning the investor gets 70% of the profit and I get 30. All right, so let's deep dive into the actual numbers. So as I mentioned, 455 is our target. We're assuming annual appreciation of 5 years, which is very reasonable given the growth trajectory in Cornwall. This is a 2-year deal, and the reason this is 2 years is this family has great income, has great credit. What they don't have is Canadian permanent residency. And so they're waiting for that to come in, but they don't want to be stuck renting, paying really high rent and having a lot of uncertainty for their family. They have 2 children, and they want to have a stable life and would much rather do so in a house that they can call their own eventually. And so that is why, and the other reason is if you purchase a home today as a non-resident or non-PR in Canada, you have to pay a 25% non-residential speculation tax. So it doesn't matter if you're working in Canada, living in Canada, most Ontarians who don't have their PR card are required to pay this tax up front. You do get it back once you get your PR card, but a lot of people don't have 100K just sitting around. So rent to own is a nice alternative to give people stability while they're waiting for their PR to come in. And that's the situation here. So in terms of the numbers and how we get to the 72,000 investment, so at 455, we do 20% down. In this model, I'm assuming an interest rate of 5%. We've been seeing rates 4.5 or so. So this could certainly, if we're able to get an actual of 4.5, this will juice the numbers a bit more and we'll make those updates. But from the model, I'm assuming 5%. So cash to bank is 91, legal is about 2,500, appraisal is about 400, land transfer is about 55.75. I have a fee up front of 3,000, but the tenant buyer has a lot of skin in the game. They're in for 30,000. So this lowers the investment from the investor to close down to 72,475. So let's talk about the money coming in and out each month. So rent is 24.50, and I always try and set rent a little bit lower than market rent to give our tenant buyers a bit of a deal because they're paying this additional option credit or the savings credit. So all of this will go towards their future down payment along with their original deposit. So each month we have $2,800 coming in. Now coming out, our mortgage is about $1,954. Insurance is about $200, although we've been able to get some cheaper insurance lately. And property tax is right around the $330 mark right now. Of course, it's going to go up over time, so I'm estimating $350. So our net in every month is $296, which leaves a bit of cash flow for the investor, $150 a month. So what this means is you get an e-transfer to cover all the different expenses you've got as an investor, and then on top of that, there's an additional $150 that is sent to you, which you can do with as you wish. Typically, this cash flow is higher. We generally try and target 400 to 500. The difference here is because they've put in such a big down payment, I've reduced their option credit. And so that limits how much cash we're getting in each month. But the benefit of them putting in so much down payment is it reduces your initial investment. All right. I take a $100 property management fee here. So this leaves about 46 bucks each month going into our joint account. Let's move fast forward to 2027, so 2 years time. We are now selling the property back to the tenant buyers at $501,000. This is contractually documented on day one. Everything has been signed, so these are the prices. We return that initial $30,000 deposit. For the last 24 months, they've been paying $350, so now they've accumulated another $8,400 in credits for a total of $38,400. We have our mortgage discharge, legal. We return your initial investment, of course. So this is the proceeds at sale time. Now let's look at overall deal profit. So the appreciation from 455 to 501 is 46,000. Over the 2 years, our mortgage has been paid down by 11,000, and we had slightly negative cash flow. But if we add these three things up, the subtotal is 56,000. Our hard costs were legal in the beginning, legal in the end, land transfer tax, and then I have to pay a referral fee because this came in through a referral. So the total profit available on the deal is 43,681. Now let's get to the investor return. The investor was in for 72,475, and I'm targeting a return of 21% annual to the investor. For 2 years, that's 42%. So if I multiply 42 by the 72,000, that's a profit of 30,440 in total. Now you received $100 of cash flow, sorry, $150 of cash flow each month for 24 months. So that's 3,600. If I subtract this 3,600 from the 30,000, that leaves 26,840 that you will receive upon closing. In terms of how I make money, there's an upfront fee I charge of 3,000. I received $100 a month for property management. And so that at the proceeds of sale, here's what's left over, $78.42. So I try to make sure you get paid first, and then I get what's left over, and we know the total profit pie, so this is what will be left over. So in terms of overall profit split, like I said, the total profit on the deal is $43,681. You're getting $30K, I'm getting $13K. So really it's about a 70-30 split, and we try and target around that. So if this is a deal that's interesting to you, you've got money sort of sitting on the sidelines, you've got money in a HELOC, you're not feeling great about the stock market now because every day or every second day there's a new tariff headline. This is a great way to help a family, make social impact, and get great return on your money passively. So get in touch. You can email me at info@renttogrowhomes.com or check out our website, renttogrowhomes.com. Thank you.